Hi everyone, welcome back to satokoworld Finance Academy. Today we're going to talk about debt. And I know for some of you, this is a topic that's painful, right? I've been there, and don't worry, we're gonna get through this. Remember, debts hate attention, and we're gonna give attention to the debt, and we're going to eliminate it. All right, let's get started. So there are two types of debts. The first one is unsecured debt. This type of debt has no collateral attached to it, such as most of the credit cards are unsecured debt. And then the second debt is secured debt. Those type of debt are guaranteed by assets, such as car or house. And also public student loan is a secured debt because it's backed by government. And now you may have heard of good debt and bad debts, right? So the good debts are mortgage or student loan because we're paying for the future. But I would add it to a certain degree. So it's a good debt to a certain degree. And especially student loan debt, it can be a dangerous debt. And I'll talk about this a little later. And now the bad debts, most of the time it's credit card debts, because credit card debts has a high interest rate and you can accumulate multiple credit cards, and this is scary, right? And line of credit debt. And many of you may have this credit card debt, and we're going to talk about this credit card debts today, okay? And I have a news for you. I have many news, but another news. So debt is bondage. So this one is a financial advisor, Susie Allman, talks about this. Debt is bondage. And you will never have a financial freedom if you have debt. And it is true, especially this credit card debt. So credit card debts are that you're paying for the present desire over future needs. So many of you may be suffering because in the past you pay for the desire, right? Now you're struggling for the needs. And when you're in debt, you feel powerless, and people feel it. And many of you may be feeling powerless, right? I was feeling powerless when I had debt. And when you're in control of your finance, your debt, you're starting to feel powerful. And then again, people feel it. So we're gonna get you out of the debt, and we're gonna stay out of debt, okay? So we have some roles before we starting to reduce and eliminate the debts. In life, we should have roles in every category of our lives, I believe. So here's our role before we're gonna attack the debts, okay? So the first role is we have to have protection funds. Remember what the protection funds are? The first one is a super emergency funds. So those are the actual cash money you would have it with you physically. So it's between $200 and $500, depending on numbers of family members. And emergency fund. So before you starting to tackle this debt, I want you to have $1,000 in your bank account. This is an emergency fund that you would have it in cash, okay? And now, role 2, make sure student loan is paid on time. And I was talking to you about student loan being dangerous loan because, especially for people in the US, student loans are not forgivable in a bankruptcy. And in Canada, for 7 years, it's not forgivable. And also Canada and US, if you didn't pay the student loan, and if you when you retire, they can come after you and deduct your old security benefits as well, with the interest, of course. So this is a very dangerous loan as well. So make sure you're on time to pay for this loan, okay? And now, number 3, rent or mortgage and utilities covered. So utilities meaning including phones and internet, because we do need phones and internet right nowadays. Without cell phone, can you imagine living nowadays? Yeah, make sure it's covered. And number 4, car loans and insurances are covered. So some of you may not need the car, but many people actually rely on the vehicle, right? And also insurances. And without insurance, we can't drive. And I'm not just talking about the car insurance. Might be the medical insurance, is whatever the insurance that it might need to be covered. And then finally, number 5, estimated grocery costs. We need to eat, right? And estimate it. You might want a little bit overestimate for that one. Okay. And then plus, I put $200, but whatever the extra money you might need. Again, depending on the size of the family, right? But we're not excessively spending money because we are going to pay off the debts, right? So whatever the minimum you might need to cover for whatever. So if you're eating out for like once a week, you might want to consider reducing eating out maybe twice a month instead of once a week. Okay, so that you can be creative about it to save money. And now we're ready to start attacking the debts, right? And so here is an example. Before that, I'm going to ask you a question. How much are you committed to pay down each month towards the debts? Remember, in order to progress, first step, we have to decide. So we're going to decide to commit to pay down. And how much are we going to commit to pay down? So this is the amount you have to decide, okay? And then now, I'll give you the real life example. Well, it's not real life, but I just created it. But here is an example. So this person has 3 credit card debts, all right? The credit card 1 has an amount of $5,000. Interest rate is 19%. Minimum payment is $100 a month. And second credit card is $1,000 owing, and interest rate is 15%, and a minimum payment is $25 a month. And then the third credit card, it is $500 owing, and interest rate is 10%, and minimum payment is $10 a month. First of all, I want you to write it down, whatever the credit card that you owe, and from the highest interest to the lowest interest. I want you to write it down like that, okay? And now there are 2 methods to pay down the credit card, okay? And I have my favorite way of doing it from this, 2 methods, but I want you to decide which way works better for you, okay? So the first way is a snowball. This way is financial advisor Dave Ramsey preaches it. And so snowball is you pay down the smallest amount on the credit card. So just ignore the interest rate and just attacking the smallest amount first. And then the second way is avalanche way. This is the way the financial advisor Susie Ullman preaches. And she preaches to start from the highest interest. And this way is my favorite way, to be honest. But with the snowball method, this is actually gives you the momentum. So it's tricking the human mind. And because once you start, paying off one credit card, you feel like, okay, let's do the second one. But you're gonna pay more interest on it after all. And in the avalanche way, it is a logical approach because you pay less interest, but you need more willpower for it. Okay, so you decide, okay? So here's an example. Let's say this person decides to pay down $300 a month towards this person's debt. How would it work out? So with the snowball method, we're going to attack the smallest amount of debt, right? So which one is the smallest amount of debt? So credit card 3 only has $500 owing. So credit card 1 and 2, we're going to pay the minimum payment. So credit card 1, we're going to pay $100, and 2 is $25, staying a minimum. And for rest of the money, we're going to pay towards credit card 3, the minimum amount one. So $300 minus 100 plus 25 and 125. So it is $175, going towards credit card 3. So $500 owing, and you're already paying $175. So credit card 3 is gonna be eliminated quick, right? So that would give you a momentum. That's his method. And then with the avalanche way, so that's the highest interest first, right? And let's find the highest interest first. So that is a credit card 1. So we're going to pay credit card 2 and credit card 3 with a minimum payment. So that's 2 is $25, 3 is $10, and rest of the money is going all in with a credit card 1. So $300 minus $35 is $265 going into credit card 1. So credit card 1 has the highest amount, right? So in order for you to pay it off $5,000 with paying $265, it's going to take a while. So you would always have 3 credit card debts. So you would have to have the willpower for it. So that's the method. Like I said, I don't want to pay much interest, so I like the avalanche way, but you know yourself, and I give you the option so you can choose which method would work better for you. All right, so I think this will help you to get rid of debts, most of the amount. Within 2 years, you should be able to get rid of your credit card debts. All right, so today's lesson was how to reduce and eliminate debts. If you want to work with me and expedite your progress, please contact me at satokoworld@outlook.com. satokoworld@outlook.com. And let's stay wealthy, and we're gonna be wealthier. So I'll see you guys on our next lesson. Bye.